Good morning, everybody. I welcome you to this annual general meeting of Sayona Mining Limited. My name is Paul Crawford and I will chair the meeting today. I would like to introduce the other directors. Managing Director and CEO Brett Lynch is present, and Non-Executive Director James Brown is online. Alan Buckler, Non-Executive Director, makes his apologies for being unable to attend. Also present online is Emery Robinson, Audit Partner from Nexia Brisbane Audit, our auditors, and Bridget McKinley from Nexia, our Audit Manager, is present in the meeting today. Also present is Jessie Yerma, a Returning Officer from our share registry, Computershare. I'm advised that a quorum of members is present and call the meeting to order. Valid proxies have been received and tabulated for each resolution by Computershare. I intend to vote undirected proxies appointing the chairman in favour of each resolution being considered at this meeting, including Resolution 1, subject to compliance with the Corporations Act. All resolutions will be determined by poll. In accordance with the company's constitution, the notice of meeting was distributed to all registered members on the 14th of October 2022. No notice of any other business has been received. I advise that we have received a number of written questions prior to the meeting. These will be addressed at the relevant time. If there are no objections, I will take the notice of meeting as read. I table the minutes of the previous annual general meeting. The minutes were signed by me as chairman of that meeting as a true and correct record of the proceedings of the AGM. I don't intend making a formal chairman's address at this time. We will conduct the business of the meeting and then Brett Lynch will deliver a presentation relating to the operation and plans of the company. In relation to questions, today's meeting is being held both in person and online via Computershare meeting platform. This allows shareholders, proxies and guests to attend the meeting virtually. All attendees can watch a live webcast of the meeting. In addition, shareholders and proxies have the ability to ask questions and submit votes. Online attendees can submit questions at any time. To ask a question, select the Q&A icon. Type your question into the text box. Once you have finished typing, please hit the send button. Please note that while you can submit questions from now on, I will not address them until the relevant time in the meeting. They will either be subject to the specific resolutions or a question and answer session at the end. Please note that your questions may be moderated, or if we receive multiple questions on one topic, they may be amalgamated together. To ask a verbal question, please follow the instructions in your below in the broadcast. For those shareholders in the room today, please state your name and the holding you represent before asking your question. In relation to voting, if you have not already recorded your proxies with Computershare or you wish to change your vote, you may submit your vote online, logging into the Computershare meeting platform on your smartphone, tablet or computer. Voting today will be conducted by way of a poll on all items of business, and I will shortly open the voting for all resolutions. If you are eligible to vote, once voting opens, press the vote icon on all resolutions and they will be activated for voting options. There is no need to hit a submit or enter button as the vote is automatically recorded and you will receive a vote confirmation on your screen. To change your vote, simply select a different option. Votes can be changed up to the time the chair closes the poll. I will now move to the items of business and declare voting on all resolutions open. I table the annual financial statements and audit reports for the period ended 30th of June 2022, together with the directors and auditors reports in respect of those financial statements. These were released on the 30th of September 2022. Are there any questions or discussions in respect of the annual financial statements or reports of the board? I also take this opportunity to invite shareholders to raise any questions they may have in relation to the audit report or conduct of the audit next year. Any questions from the floor? Any other?
No.
No?
No.
Thank you. We'll move on to the next item of business. The Corporations Act requires all listed companies to present their remuneration report for each financial year for adoption by shareholders at the company's annual general meeting. The report can be found within the Directors' Report section of the annual report. This is a non-binding advisory resolution. I propose that the Directors' Remuneration Report within the Directors' Report of the company's 2022 annual report be adopted. Any questions from the floor? Any questions online?
No.
Thank you. You see proxies voted in regards to this resolution are displayed on your screens. No more questions. We'll move on to the second resolution. Now, this resolution relates to the re-election of me as a director. So I will hand over to Brett, our Managing Director, to chair this part of the meeting.
Thank you, Paul. In accordance with the director rotational retirement provisions of the company's constitution and ASX listing rule 14.5, Mr. Crawford is due to retire at this meeting and, being eligible, offers himself for re-election at this meeting. I refer you to details of Mr. Crawford's experience set out in the explanatory statement. I propose that Paul Crawford, who retires by rotation in accordance with Rule 75 of the company's constitution, being eligible and offering himself for re-election, be re-elected as a director. Any questions from the floor?
So I've already spoken to Paul briefly about just the communication with the office, which is on top of. It's just some of the areas in the reporting this year. There's been numerous errors that Paul signed off on. Is there, moving forward, is there anything you're sort of putting in place to stop a lot of these accounting areas that have been happening in the reports? One as early as yesterday or 2 days ago.
Yes, there is. In fact, we've just employed a finance manager who's taking over a lot of these. Will take over all these reporting, financial reporting functions and that sort of stuff. Yeah. We're also sort of looking at employing some additional office staff as well to provide additional resources.
And this is the office move that you were talking about?
This is, yes, that's part of the process, yes. So
I wasn't sure whether the disconnect was with Nexia or was it on our side?
No. Yeah, the errors you're referring to, yes, are either addition errors on a 3B and that sort of stuff and whatnot. So no, they're my responsibility and I accept that. We're working to rectify that issue.
Great, thanks, man.
I think overall, my comment on, and it's fair criticism for us. The background to it is just the rate of growth at which Sayona has, moved over the last 12 months. Very few companies have actually ever done that. Yeah. And so one of the challenges for us is to literally keep expanding our capacity as fast as we're expanding our assets and our market position. That has then caused us to struggle to keep up in several areas. Certainly one in terms of the commercial administration has been one. And so to address that, exactly as Paul's saying, we've started and restructured the whole organisation in Quebec, because that's where 99% of all the operations and the volume will come from. So we have quite a significant now team with a CFO in charge of all of Quebec's operations. And in parallel to that, then we'll be building a team around and alongside Paul to then keep up to avoid, I think, some of these glitches and problems. So I think albeit not an excuse, it's part of the issue of this
The growing
phenomenal growth. Yeah, growing pains, yeah, exactly right. But we're growing as fast in our administrative area as we are trying to do.
And this being in the 200, there's just this focus on it.
Correct. It's a step change,
Yeah.
for any organisation, a significant step change. But they're on board, and hopefully we'll all see improvement from that investment. Okay. Any other questions?
No further questions.
So, proxy votes received in respect of the resolution are displayed on your screens. You can read those yourselves. I'll now hand back to Paul to chair the remainder of the meeting.
Thanks, Brad. Resolution 3 relates to the ratification of the issue of shares under a placement made to fund our North American lithium project. In June 2022, the company undertook a successful single tranche placement to global institutional, professional and sophisticated investors to raise approximately 190 million Australian dollars through the issue of a little over 1 billion new fully paid ordinary shares. Details of the placement were announced to the ASX on the 27th of May. NAL is 75% owned by the company and 25% by Piedmont Lithium Limited. Listing Rule 7.1 provides that a company must not, subject to specific exceptions, agree to issue more securities during any 12-month period than that amount, which represents 15% of the number of fully paid ordinary securities on issue. On the 2nd of June, the company issued without shareholder approval that approximate 1 billion placement shares in reliance to Listing Rule 7.1. Listing Rule 7.4 sets out an exception that provides where a company at a general meeting ratifies a previous issue of securities, those securities will be deemed to have been made with shareholder approval for the purposes of Listing Rule 7.1. By ratifying this issue, the company will retain flexibility to issue equity securities in the future up to the 15% capacity without the requirement to obtain prior shareholder approval. Accordingly, the company now seeks shareholder approval to ratify the issue of those placement shares. I propose that in accordance with the provisions of Listing Rule 7.4 and for all other purposes, shareholders ratify the previous issue by the company of a total of 1,054,406,346 shares under Listing Rule 7.1 at an issue price of 18 cents per share to those recipients as set out and otherwise on the terms and conditions set out in the accompanying explanatory memorandum. Any questions from the floor? Anything online, Anthony?
No.
Thank you. Again, you can see proxy votes already voted in respect of this resolution. Resolution 4. On the 19th of October 2019, the company entered into an at-the-market subscription agreement with Acuity Capital Management. On the 5th of August 2022, the parties agreed to increase the ATM limit to a new limit of $200 million and to extend the expiry date to the 31st of January 2025. To date, the company has utilised the ATM to raise $6.45 million. Following the increase in the ATM limit to $200 million, the remaining standby equity capital available under the facility is $193.55 million over the period to 31st of July 2025. The company retains full control of all aspects of the placement process, having sole discretion as to whether or not to utilise the ATM, the maximum quantum of issued shares, the minimum issue price of the shares, and the timing of each placement tranche, if any. There are no requirements on the company to utilise the facility, and it may terminate it at any time without cost or penalty. Acuity Capital and the ATM do not place any restrictions at any time on the company raising capital through other methods. The company issued 95 million shares on the 29th of October 2019 as security under the ATM. As part of the extension and increase of the ATM facility announced on 5th of August, the company has agreed to issue an additional 155 million new shares for nil cash consideration, taking the total number of shares issued as security pursuant to the terms of the ATM to 250 million shares. The company may, however, at any time cancel the ATM as well as buy back and cancel the collateral shares for no cash consideration, subject to shareholder approval. Listing Rule 7.1 provides the company must not, subject to specific exceptions, agree to issue more equity securities during any 12-month period than that amount, which represents 15% of the fully paid ordinary securities on issue at the commencement of that 12-month period. The effect of Resolution 4 will be to allow the company to issue 155 million shares no later than 3 months after the date of this meeting without using the company's 15% annual placement capacity. If Resolution 4 is not passed and the company share will not issue the shares, I propose that in accordance with Listing Rule 7.1 and for all other purposes, the issue of up to 155 million shares to Acuity Capital on the terms and conditions set out in the accompanying explanatory statement be approved. Any questions from the floor? Anthony, anything online?
No questions.
Thank you. Again, proxy votes received in respect of this resolution are displayed on your screens. Resolution 5 seeks shareholder approval to the issue of shares and for the purposes of Listing Rule 7.4. On the 11th of January 2022, the company entered into various agreements with Piedmont Lithium Limited, as detailed in the ASX announcement of the 11th of January 2022, under which Piedmont acquired an initial shareholding in the company, including a share placement agreement. Under the terms of a share placement agreement and utilising the company's available placement capacity, the company issued approximately 2.4 million fully paid ordinary shares on the 28th of January at a share price of 2.73 cents per share, and 22.6 million fully paid ordinary shares on the 14th of April 2022 at a share price of 6.07 cents, in each case without shareholder approval. Listing Rule 7.1 provides that a company must not, subject to specific exceptions, issue or agree to issue more equity securities during any 12-month period than that amount, which represents 15% of the number of fully paid ordinary securities on issue at the commencement of that 12-month period. Listing Rule 7.4 sets out an exception to that Listing Rule 7.1. It provides that where a company in general meeting ratifies a previous issue of securities, those issues will be deemed to have been made with shareholder approval for the purposes of Listing Rule 7.1. By ratifying the issue of 25,038,534 placement shares, the company will retain the flexibility to issue equity securities in the future up to the 15% capacity without the requirement to obtain prior shareholder approval. If Resolution 5 is not passed, the 25 million placement shares will be included in calculating the company's placement capacity under Listing Rule 7.1, which will limit the capacity of the company to issue further shares as required without shareholder approval. I propose that in accordance with the provisions of Listing Rule 7.4 and for all other purposes, shareholders ratify the previous issue by the company to Piedmont Lithium Inc. of a total of 25,038,534 shares under Listing Rule 7.1 at an issue price per share and otherwise on the terms and conditions set out in the accompanying explanatory statement. Any questions from the floor? You, Anthony?
No questions.
Thank you very much. Again, proxy votes cast to date in respect of this resolution are displayed on your screens. Resolution 6 relates to the adoption of the company's employee share and option plan. This resolution seeks shareholder approval to adopt an employee share and option plan as an exception to Listing Rule 7.1. The board of the company wishes to adopt the share and option plan so as to enable it to issue equity securities to its key employees based in Quebec, Canada and Australia. The issue of these equity securities will provide an incentive to the company's employees to achieve the long-term objectives of the company to attract employees of experience and ability. Broadly speaking, and subject to a number of exceptions, Listing Rule 7.1 limits the number of equity securities that a listed entity can issue without the approval of shareholders over a 12-month period. If this resolution is approved by shareholders and for all purposes under the Corporations Act and the ASX listing rules, it will have the effect of enabling the securities issued by the company under the share and option plan to be automatically excluded from the formula to calculate the company's capacity during each of the next 3 years, subject to ASX listing rule requirements. If this resolution is not passed, the company will be able to proceed with the issue of securities under the plan to eligible participants if it has sufficient capacity, but any issues of equity securities under the plan will reduce the company's capacity to issue equity securities without shareholder approval under Listing Rule 7.1 for the 12-month period following the issue of those securities. This will decrease the number of other equity securities the company can issue without shareholder approval. Directors are eligible for issues of securities under the plan. However, issues to directors and their associates will still require separate shareholder approval under ASX Listing Rule 10.14, whether or not shareholders pass Resolution 6. I propose that for the purposes of exception 13B of Listing Rule 7.2 of the ASX listing rules and for all other purposes, the company be authorised to issue securities within 3 years from the date of this resolution under the employee's share and option plan, the terms of which are summarised in the explanatory memorandum as an exception to Listing Rules 7.1 and 7.1A of the listing rules. Any questions from the floor? Thank you. Anthony, anything on?
No questions.
Thank you. Proxies voted in respect of this resolution are displayed on your screens. That concludes the formal part of the meeting. In respect of voting, I'll leave the voting of all resolutions open for a few more minutes, and Computershare will come around to collect your voting cards. So we'll take a few minutes while that happens. I haven't seen much. Just make sure we don't put the cards in. Make sure you get
Any other cards? Yes, Catherine? Perfect.
You guys right?
Yep.
That's it. I now declare the poll closed. I thank you all for your attendance and support. I will release the final votes later today. I'll now hand back to Brett to run through a presentation, and then we'll have a question and answers following that. Yep, next slide. Okay, over to you, Brett.
Very good. Well, firstly, welcome everyone, and great to be here. I see that we've got about 170 plus people online and in the room here, so thank you everyone for joining in. I would now just like to give you a bit more colour and flavour of the future, and where I guess starting is what we achieved in 2022, because it's been a busy year and it's easy to forget. And then also I'll move on to talk about 2023 and what I see as critical focus for Sayona in 2023 and how to really continue to drive shareholder value. So 2022, I think 2022 started very much with us getting prepared to bid for NAL. It seems a long time ago in my mind, but it was only just in June, July last year that we opened the betting on acquiring that business out of administration. And it seemed a pretty humble start. I remember we raised about $50 million to prepare our bid, which was a big bid for us. I don't know that we were even 10 million market cap at that point. And NAL assets were over $400 million in terms of replacement value. And so we set sail on embarking to win and secure the confidence, I think, of the Quebec government, but the stakeholders in Quebec, who had a lot of influence on where that decision would go. So that was in July. By the time we got to August, I think the price had gone up. We eventually paid 94 million Canadian dollars. We joined with Piedmont, our great partners at NAL, to successfully then take and secure that business, and then form what we call the B2B hub, where it is a hub and spoke model, which links in our two deposits, Prospects, Portier and Tanzim, which would then help feed the NAL concentrator. And that was a new model for Quebec, probably the lithium industry, where we weren't really building one mine, one concentrator, but in fact reduced the amount of capital and spreading that over multiple assets, giving us benefits of a longer mine life, more flexibility in terms of blending and being able to get quality control, and then getting economies of scale that we knew we would need to compete to become competitive in North America, because NAL had failed 3 times. We had to change the paradigm there. And secondly, we always believed that to be plugged into an electric future, which is now real, that we would need to go big, and we'd have to be capable of scaling up to meet more than 30,000 tonnes of capacity a year. And so that was the start, I think, of this whole chapter for Sayona, come August, when we were able to secure that asset. I think though, and the board was pretty surprised when by the time October had come along, and a couple of months later, we and I put forward a proposal to acquire another project up north called Moblan, which we had our eyes on for many years prior to me coming. We knew it was a good deposit. It was an underdeveloped deposit. It didn't have a clear business strategy and plan on how to turn that from a deposit to a business, but I think we did. And we knew that we needed more tonnes and better quality tonnes, higher grades, lower stripping ratios. And so we quickly seized the opportunity in October to acquire then Moblan. I think at that point, we raised $100 million to fund our bid, which was $86 million. And we acquired 60% of Moblan in partnership and with effectively Investment Quebec, the arm of the Quebec government. And that again was important in terms of, I mentioned, forming this trust and confidence as a foreign company into the heartland of Quebec, and being able to align our strategic direction with the government's strategic direction, which is all about building the lithium hub for North America, and creating a battery ecosystem, and for us to be a leading supplier of that. And that was the second, I think, pivotal point where we started to become serious, like the largest potential lithium player in Quebec, and certainly aligned and bolted to the government's directions, which has a large investment and commitment to developing that. From there, we again, little steps was the motto for 2022, and I think we demonstrated and proved that we did that pretty much a step every month. We also knew and seized the opportunity to acquire a prospect called Lake Albert, which is close to Modeland. Modeland is a relatively small size. It's only about 500 hectares. And for us to produce what we wanted, which was significantly more than 30,000 tonnes a year of hydroxide, we would need more prospects. So that's why we moved quickly to acquire what we think is another high potential asset in that area. By the time we got to March, we had taken the reins of NAL. We've got our feet under the table. We've moved in our team, and we've done the assessments and effectively then re-rated the resource base at NAL. And that more than doubled the 30 million tonnes of resource that we had acquired on paper at NAL to close to 80 million tonnes at NAL. That gave us what we were looking for, was that volume to be able to create NAL with a bigger, better, brighter future. And in addition to that, with Modeland and with Ortier, we all of a sudden moved way ahead of any of our peers in Quebec in terms of a resource footprint. We were close to 120 million tonnes. We started the year at 20 million tonnes. So we've gone from 20 to 120 in less than a year. At 120 million tonnes, we've gone from the capacity to produce on paper 20 to 30 million tonnes of lithium hydroxide a year, or carbonate, to 60 to 90,000 tonnes a year. This is what's been driving our strategy in 2022, because we know the market, the Fords, the GMs, who we talk to regularly now. Each of them are needing well more than 100,000 tonnes a year of hydroxide capacity, and they want to source it out of North America. And I think they all see Quebec as being the premier place to source that from. So that's why it wasn't coincidence, it wasn't luck. It was a bit of those, but it was mainly driven by our ambition to become the significant player, the leading footprint or resource base holder in Quebec. And then by the time we got to May, June, again, we had moved past evaluating and confirming the expansion of the NAL resource base to underpin now a 28-year mine life at NAL, to actually then commissioning and completing the PFS on NAL, which indicated, even based on, frankly, some pretty conservative assumptions that we had in, which we continue to refine, but that certainly had a very bright future for a business that had failed 3 times. Pretty much an NPV at close to $1 billion. So that is a snapshot, I think, of 2022. We did move, I think, according to what we said we would. We did deliver a lot of growth in actually assets, and we'll talk a second, both and as well as in shareholder value, but it was little steps quickly. And I think that was one of the key differences of how Sayona went from 10 million market cap to 2 billion market cap, of being able to execute and follow that approach. Next. So in terms of shareholder return, again, I think 2022 was a pretty impressive year. We had moved ourselves really well and truly from a junior prospector up to an ASX 200 listed company with a market cap now sitting plus or minus $2 billion. And again, our share price returns, even with, you can see the amount of raisings that we needed to do to buy those assets. We bet the company quite hard, but it paid a pretty good return for us in 2022 as well, which I expect those assets haven't come to maturity yet. That will continue to increase that shareholder value. Next. So let me, just talk to this slide, because I think it is something that hasn't changed pretty much in the 3 years that I've been at the helm. These series of steps in terms of our future and our pathway to maximising the value we're adding to our shareholders, the value that we're adding to Quebec, and the value we're adding, frankly, to the security of supply in North America of this EV revolution. It needs to be done, and I think we're pretty proud to be now very much, part of it. Plugged into electric of an EV future was a bit of an aspiration 3 years ago. I mean, today, I think all of us can see EV revolution is real. It was maybe not 3 years ago. It's 100% real today. And is Sayona plugged into it? In North America, you bet. We are very plugged into it. So it's building on these steps that will continue us to, I think, lead there. The first in 2022, the goal was to complete the restart of NAL and the B2B hub. Tick. I think I just talked about that in terms of the steps that we did in 2022. We have now 3 deposits. We have by far the largest lithium hub in North America between Montier, Thames and NAL. And we have the only one with a production facility, which will go into production early next year. So that was achieved, and we developed the Northern Hub to really take us to another scale of capacity with 2 hubs in Quebec supplying what the OEMs need at that level. So I think that first step, I like to look back and go, yeah, tick. 2023 to 2024, the next step. That is about targeting, to get into production at NAL and the B2B hub. We'll talk about that in a minute in terms of NAL update and some of the more details. But I think we're well on track to do that. We've had lots of visitors to NAL operations over the last 6 months. I was just most recently with Keith Phillips, our partner, the CEO of Piedmont, with Jim Brown, our other director. And between us, we've got a lot of man-years, too many really, of experience around building these sorts of businesses. And all of us, I think, are delighted to see what is now coming to fruition in terms of that refurbishment of that plant. We've had many potential investors from Korea, chemical producers, as well as a big contingent most recently from Wall Street, which again I think is helping the world see, but believe that this quest that we've been on in terms of successfully turning around NAL, we've got a good plan for it, it's on track, and it should be delivered with relatively low risk compared to a lot of other projects out there today. The second goal for, so we'll be weighed and measured, and in fact on our updated website you'll see I even put a stopwatch. I do come from a production background, and you've only got so many hours a day to produce so many tonnes. That hasn't been lost on me. So all eyes and all clocks are ticking on in terms of getting us into production. So again, I think we'll be weighed and measured, but I think we'll actually be proven that we did deliver that one as another small step in 2023. The next area is downstream. Our plan has always been for Sayona to be a fully integrated lithium business. And that's not just a rock producer and selling rock, but it is actually to be doing that, but then also partaking in the chemical conversion. That business model, I think, is the way in which good lithium companies are set up. And so we've taken the first step on exploring that with the intention to develop that at NAL. There is a partially constructed and previously permitted carbonate plant on site, and the board of the joint venture, us and Piedmont, have commissioned then a PFS study to be completed by Hatch, and we'll likely see those results around March next year. So in 2023, we'll be starting to really evaluate seriously on what that option is and is that the best option for the JV. But it looks pretty attractive at this stage.
Come on, it's the best. Come on.
Come on, Aussie, yeah. The last, I think, key focus for 23, maybe not the last, but the third major one is to expand the northern position. Said we moved there again with the belief, but it was, a belief that that deposit, based on what we knew about it, would be one of the best, if not the best, deposits in North America for spodumene, if not the whole northern hemisphere. I was looking for the green bushes of the north. That's what I think Sayona wants, and we'll see if we found it. But we're certainly doing a lot of drilling. I'll talk about that in a moment. We're very encouraged, if not excited, by the results, and we will continue to expand and invest significantly to move that project ahead at a rate of knots. And if you think we've been going quickly at NAL, my American friends, you don't see nothing yet in terms of what we'll be pushing for north, because we do think that has got a unique competitive ability in terms of its grades, its stripping ratios. Not only could be the biggest, but it could be the lowest cost producer in all of North America. And so I see that as the great next step for Sayona building our business to become the leading lithium supplier in North America. So that's the focus. Those three areas is what we will be head down, bum up, and my team will be focusing 100% on that in 2023, 24, to actually deliver on those in that period. So next year, when we look at the 2023, I expect to be weighed and measured on how we did with those three. You're welcome to weigh and measure me on it. 25 to 26, because there is, a fair way to go in terms of creating this industry and Sayona's position. In 25, 26, assuming we get through those three development stages in 23, 24, we will be looking then to start up that downstream refining in a B2B, whether it's carbonate, whether it's hydroxide, but we are committed, joint venture, with the Quebec government to moving downstream in Quebec. We signed that up with the agreement on acquiring NAL, and I intend to stick to that. A deal's a deal. So that will be an enormous step for us, because we move into the chemical world, and Sayona doesn't have a history of chemical production, and so we are out now in this period talking, evaluating and negotiating with global chemical producers who may well be able to partner with us and help us deliver that more competitively, with more capacity and more capability. And that is something that we're evaluating in the next year. The other area in 25, 26 is we will be looking to have Moblan then into SG6 production. Whether that's one line, 250,000 tonnes, two lines of 250,000 tonnes, three lines of 250,000 tonnes. That's what we're evaluating and what we'll be looking to scale up towards starting in 2026. So that'll be another project that, again, we've had a team now for the last 18 months evaluating, designing, refurbishing the concentrator at NAL. We'll see in March if we were up to the job. I think at this stage we are, And that will give us, again, in a very tight labour and skills market, this experience that very few have in North America. No one's really done that successfully. And we'll be able to actually redeploy that skill base, which I think is even more precious than SG6 at the moment, because you can't even buy that. And we hope to be able to roll over that experience, those skills, to help us accelerate faster than anyone else our next projects up north, whether it's 1 line, 2 lines, or more. So that is the second key platform, building block for 2025-26. And then the most audacious one is to be able to, though, in parallel, move downstream with chemical production with Moland. So we want to fast track because the OEMs, the customers, want us to do that. And so rather than traditionally building a concentrator and then, being able to build the refinery, we're looking to parallel those for the Moland project. And so we'll be actively, and we are actively out looking where we would locate that, and again, which partners who have got that global scale that you would need to do more than, be able to process more than one 30,000 tonne line. That would be an enormous step up for Sayona, but that's one we are committed to, and over the next few years we'll be looking to embed in part of our business plan. So that's 25-26. We will have then 2 sites fully operational. NAL down at a chemical product, notionally carbonate, and we will have the Moland project up producing either 250 or 500 or plus 1,000 tonnes of spodumene, but very quickly alongside that, developing the chemical processing capacity for that 30,000 tonnes or 60,000 tonnes or more. That's where we'll get to by 2026 is the plan. 2027 and beyond, I think that really is consolidating that. Our goal at the end of, before the end of 2028-29 is to have more than 100,000 tonnes of hydroxide and carbon capacity available to the US car market effectively. And so that's where the light is on the hill in terms of our steps. And we'll know if we're going to be there, as a series of steps measuring it up towards 2027. Okay, let's now then jump down into some details. Move on to, I'll talk on the B2B hub and specifically the NAL restart, because that is the first project, the first step that we're focused on. Things are going pretty well. We are pretty much there in terms of all of the major capital equipment, all being procured. So from a cash perspective, great, we know, and we're on track, we're on budget with all of that. That was fortuitous. We pre-ordered those long lead items early, and that's paid dividends for sure in terms of dollars and delivery times. It's just getting harder and harder at the moment. But we're pretty much done. I think the last filter press of the big pieces of equipment is literally on its way across from Vancouver as we speak, and should be on site and will be installed over the next weeks before Christmas. So that's great. Permitting, we only have now 1 permit left, which we believe we have, but that we hope to then get formal confirmation of that over the next few weeks. But that's looking pretty much complete in terms of the permitting stage of things. So that's they're 2 major potential risks that are, I think, out of the way. We have built a significant team. There's over 100 people on site at NAL now, everyone from a CEO, pretty much through all the major functions, geology, mining, metallurgy, all those lead management roles are in place. And we're starting now to fill out the plant floor operations. And I think in line with that, of course, one of our key objectives is no injuries to anyone ever. And so far, we've been able to deliver on that. And it's not a small workforce, and it's not an easy speed at which we're moving. So that's fraught with risk, but the team's managing that well. And I think it's an indication of the ability for us to have been able to recruit. I said, and I don't say that lightly, the only thing probably more precious in the lithium industry at the moment than SG6 is trained, qualified professional people. There's very few, particularly in the West. And we've been able to attract, I think, more than our fair share of trained, qualified people. One, because we were able to take the best of the best out of NAL. And so we handpicked who we thought were the great people to carry forward with us, who had that experience. But two, we've brought in more than 50% of new people who have really wanted to make the move for two reasons. One is they're all hardcore, that area of B2B is the largest gold mining district in all of Canada. And they're keen to make a difference and move to a clean, a green, a renewable mining sector. And that's been great for us as being part of it. And second, I think the brand that Sayona Quebec has actually established itself, as a leader, a place of choice in terms of working standards and a fresh approach to want to change and make a difference. And I think that's been one of the greatest return on investment we are getting at the moment, and we'll see in the future. So that's been terrific for the NAL restart, being able to actually secure those people. It gives us an enormous competitive advantage of anyone else who wants to come into Quebec and start, attracting people, because that is the biggest problem for anyone wanting to do that. We've just recently awarded one of the largest mining contracts awarded in the B2B area, and we've got 9 contractors starting now, and by the time they're up and fully operational, we'll have almost 180 people on site. So we were there, as I said, I was there with Keith and Jim a few weeks back, and the trucks are all being assembled, and the teams are actually already running, even though it was October. We have decided to get the training in, to get the ROM pads ready, everything that we needed to change, some of the pre-stripping done. So as when we start, when that clock ticks down, we're straight out of the gates and we're into production. So we are again, investing early to make sure we deliver on time and in full. So that's NAL on track, ready for end Q1 2023 production. The other part of that I just today wanted to highlight was the next slide, which we just announced at the start of this week, another expansion of our footprint at NAL, and we've come to a deal with a neighbour. It's a group that's TSX listed called Jordan Mine, and they have a property that surrounded or was adjacent to our lease significantly. And the deal is that we will, in a series of steps, be able to expand effectively the footprint of NAL. Again, NAL is circa 500 hectares. It's not a big lease area. And now with doubling the resource base, doubling then the amount of tailings over 28 years, not 14, we need more area. So the first step was to secure additional area, and that is just under 1,000 hectares, of which we now acquire, which gives us the flexibility, ability to move, to increase our infrastructure area and what we need to now develop NAL to the capacity that it could be. Great. and we actually own those today. So that gives us a lot of flexibility in terms of where the engineers, the mine planners want to do the expansion of the mine over this longer mine life. In addition to that, there's another step which is part of an earning arrangement that we've agreed with Jordan, where over a couple of years we'll take up to 51% of this project called Vale. Jordan have several projects. This is just this one called Vale. We'll take 51% of this remaining area, which is another roughly 1,000 hectares. And the idea there is we, Sayona, will earn in by investing in up to $10 million of drilling over the next 2 years. There are areas that are highly prospective that literally adjoin our boundary of where the deposit is headed on strike. We know there's outcropping pegmatites on the other side, and we're keen to now explore and confirm that there are extensions of some of these significant seams in that area, which would allow us then much more flexibility in terms of the actual mining production, maybe the mining grades, and some of that stripping ratios, etc., that could all help us, basically move more swiftly and get more tonnes through. And that's what NAL is all about, speed and tonnes. So we're very happy to do that, and we'll be moving like we always do at full speed, but we'll steps quickly to work with Jordan to get that proven up in terms of additional resource base. Perhaps we'll move on to then the next major focus, which is the Northern Hub, the next slide. So I mentioned, before that the North, we expect, will be bigger and better than the South. It's just the nature of the deposits up there. They're more isolated. So you do need bigger, if you like, more wealth producing deposits because the infrastructure costs will be more than down south. But they do have that characteristic, and Moblan, I think, is, a jewel in the crown in that area. So we've been drilling around the clock since we acquired it pretty much in October, November last year. I think we've now finished 34,000 metres, which I think is more than what was drilled in the last 5 years by the previous owners. We did that in 6 months. We had 4 drills running around the clock. Whether it's ice, whether it's water, or whether it's mosquitoes, it didn't matter. The team up there is very driven to identify what the real extent of that deposit is, and we believe it's significantly bigger than what we bought it for. So that drilling program is now coming to completion, but it will roll straight on to the next drilling program, which will start and run through the winter, so effectively, December through till March next year. The first program that we're completing in terms of drilling will now be off with the assay samples, and we'll get those geological results come the end of the year or early in the new year. And that will be when we'll be able to disclose what we've actually found, and is it on track for 1 concentrator or 2 concentrators or more. So that's going to be very interesting to see how that pans out, but we won't have to wait too long to know what size we're talking about up there. I think the other point is we are already, though, as what we did at Portier and NAL, we're investing in building our brand, our position in the local community, because it is a local community. It's a fly in, fly out type of operation. And so that's a tight community. And so we've been spending a lot of time to make sure that we understand what the issues are locally with First Nation, as well as the local community of Chibougamau, and being a part of that community from day one. So you'll see us invest and develop think a lot of area in terms of building that base on which people like now in a B2B have confidence that we're acting in their interests, not just ours. So that's the important part to keep things moving and moving smoothly, particularly in that part of the world. I think the last point is we, on expectations that we'll have the drill results from the first program in late this year, early next year, have now already commissioned work on a PFS and a DFS to tell us what will be the economics of one line or two lines and how many lines we possibly could have. And that has already started. So a lot of that work in terms of environmental assessments can be done now. And some of it has to wait for the drilling results, but a lot of it actually can be done now. So we have again gone in early to fast track that. And we expect to see in May next year the results of a PFS. And then by September, a DFS. And that again is to ensure that we're on track by 2024, 26 to be able to be putting the first line of the concentrator there at mainland. So that is again what I said. We go hard. We're going big. Is our intention up north, and we think we can get there. But that will be the steps. And we're working closely with the community as well as our partner, which is actually a very good place for us. And I think for our government to be, they own 40% of Moland, we own 60%. And we're going on this journey together, because if it is as significant as what we think it might be, then the government wants and needs to know that in terms of what it needs to do in terms of providing infrastructure, in terms of investment, support, etc., for such a significant project. It turns out to be that. And it needs pre-planning, so it's great to have them on the ground floor with us. I think that probably sums it up. So I could close in 2022. I think was a successful year for Sayona. And we, I think, achieved a lot of little steps and quickly. And 2023, I think, may well be even a better year because the steps will be bigger and even faster. So I think it'll be bigger steps and faster will be the motto for 2023. So thank you for that. And now we'll take some questions.
Yes. Jessica, go online here. Can I speak? Okay, great. So, Brett, a lot of speculation over the offtake agreement with Piedmont over NAL. Can we give some clarity around that offtake agreement with Piedmont?
Certainly. I think the agreement, well, first of all, it's great to have Piedmont as a partner at NAL. Piedmont helped and supported Sayona to raise the funds to secure NAL, and they're a great partner. We work very closely with Keith and Patrick, the whole team that they're building, and there's a lot of synergies there. So that's really the starting point, because I know that gets talked about as if, and then of course there's always frictions in JVs, but I think I've worked a lot of JVs around the world. I think our one works very well with Piedmont. And in terms of the agreement with Piedmont, when we acquired NAL, as part of that, and then coming in to help us fund that project, they are entitled, we agreed an offtake agreement where they're entitled to 50% or 113,000 tonnes of the SG6 output. And where that came from is NAL's nameplate capacity of that concentrator is 226,000 tonnes. So we expect to produce ultimately at 226,000 tonnes, and Piedmont will get 50% and we'll get 50%. Before that, Piedmont will get the first 113,000 tonnes. So there's a key drive for us to get up to total production, and hence why the team is looking to get more land, more resource, all those sorts of things, make sure we hit that as quickly as possible. But that's our challenge, and I think we're up to challenges, so that's where that's at. That agreement will run until, as per our commitment to the JV with the Quebec government, we go downstream. And that's the JV, Piedmont themselves have committed and commissioned the PFS to be done on the carbonate plant, and we expect to have those results in March. And then, depending on what that tells us and when and how we go downstream, then the offtake from the NAL concentrate will go to wherever that refinery is in Quebec. And that's sort of the details, and I think relatively straightforward basis of the offtake of people.
Can I add some questions to that?
Sure.
So there's been a lot of inconsistency between the two companies of what they've been saying. So there's a date stated from the original agreement in Jan 2021 of both parties coming to agreement of the offtake to start between July 23 and July 24. Is that still in force? Has it been spoken about? Do you plan on extending out the agreement to start in 24 or 23?
Just repeat that for me. You say
And it's actually stated here in the on page 11 as well. So I'll read it out.
Yeah.
Sayona agreeing to a start date for spodumene concentrate deliveries between July 23 and July 24, based on the development schedules of both parties by agreement.
Yeah. So effectively, what will crystallise that is if we're starting March 31, then that offtake agreement will start on March 31, 23.
Okay, because it says July 23 it'll start.
Yeah. But it'll start from
As soon as you
by
start
agreement.
producing.
Correct. Yeah.
So would that mean then next year, as we won't get up to nameplate straight away, we're expecting probably commissioning this month, a few test runs, 6 months, 5 to 6 months maybe of test running, shakedowns, getting the production, getting it tuned. Production next year, what are you thinking? In terms of capacity, around 100, 200,
So the PFS came out at 168,000 tonnes.
which we know it's the improvements you've made is going to blow that out of the water.
That's the plan. Yeah. So the nameplate capacity, as I said before, 226. That's our position. That in JV's position, we want all of us want to produce. No argument about that. 200 more spodumene and help. So that's where we'll get. It's just a question of how long that takes us. Of course, we all want it sooner than later. So we haven't nailed that down yet because it's a number of levers to pull. Is that going to take 1 month or take 10 months? We're working that through, and we'll give more clarification on that before we go into production come March quarter. So I think that's not defined yet. I can't give you a 100% number on that. We'll have to work that through, like all project startups are. It's anything unusual.
So if we only sort of get to around that 100, 113,000 next year, which is part of the Piedmont offtake, does that mean they will get all of the production for next year?
If we only produce 113,000 in the first year, yeah, that's right.
So the first 113 goes to Piedmont.
I don't think the agreement is down to who gets the first ton off the factory line, but Piedmont gets 113,000 tonnes of the first year of production. We have to agree what the first date of production will be. I'm assuming that it will be March 31, but if that's slipped, it might be another date. And then the second is, more importantly, the real issue is what rate will we be producing over the year.
Yeah, and that's a short-term thing. It's only next year, so.
Correct. Yeah, long term, that's right. So the first year, look, you can't answer that. No one can. God could. But the goal is to get to 226 as fast as we possibly can, and we both want to do that.
The other thing was the going downstream refining. I understand that, and I've seen the documents at the court with the Quebec government and the agreement to refine basically as soon as possible. But the Piedmont's literature talks about agreement between, they have to agree with you, not with Quebec or the Quebec government. So the rhetoric there is different as well. they have to agree to go to refining and not just receive spodumene. And then you're saying you just have to agree with the Quebec government to go down, so you do not need their approval. But there's a joint statement there saying that
Yeah, you know, I made the point that the joint venture has to agree.
the JV has to.
Correct, yeah. So, but we have already made that commitment. the
Which
joint
was my
venture,
understanding. 'Cause the
to the
JV
Quebec government, and there are significant penalties if we don't do that.
Yeah.
So, you know, that again, can't answer everything today. All I can say is it's very clear what the commitment and the intent is our joint venture will go downstream in Quebec. Crystal clear.
Yeah, the expectation I have from you is that. Yes.
How we get there, when we get there, of course, PFAS, all these things have to work out. And as we get closer and closer, the dot will become, smaller and smaller and much clearer. But we've got to work that through today, because we're speculating all of this. If you're trying to get an exact answer for that, no, we can't do that yet. Okay. So why I stick on, some, I think, very clear lines for my team and my shareholders, etc., is, I can't give every single detail, but I don't know how I can make it more clear. March 31, you can weigh and measure me. We'll be in production. How many tonnes exactly? Look, we'll debate that on the day. But my goal is as close to 226,000 tonnes a year. That's what everyone's paying me to do. So that'll be that. And the second is we are committed to going downstream. The joint venture committed and commissioned Hatch. That's not a cheap proposal to do a PFS on carpet. If we weren't committed to it, why would we sign? Why would we pay millions of dollars to do that stuff? That speaks for itself. Okay.
Yeah, more questions on offtake in relation to NAL. We've got to deal with Piedmont. Any other partners are looking at for offtake?
Oh yes, of course. I think having the ability to supply SG6 at so many tonnes in 2023 is a unique position to be in North America. No one else has got it, and so we've got lots of potential off-takers. We're in negotiations with several on which would be the best option for Sayona and the joint venture, because Piedmont are in the same position. So that's getting worked through. We will conclude and decide that before we then need to go off and selling it. But we're working our way through because there is some very attractive options. It's probably the least, one of the lesser risks on my risk register for Sayona in terms of completing that other 50% of sales. If I could walk out there with a sandwich board, I'd probably get us an order for lunch. So, yeah. But look, it's very interesting times, particularly in North America, on anyone who's got spodumene sale in 2023. So us and Piedmont are, pretty happy campers there at the moment. But we want to make the right decisions, short term and long term. We could go spot and do it to maximise short term cash. We could link it to longer term partners who could help me develop a monster project at Novoland. And maybe, there's a balance between financing and support from what they could bring versus purely a spot transaction. And that's like chalk and cheese. So we're working our way through those options. But they're all good options and problems to have. Yeah, I don't mind those sort of ones.
Yeah, question here on the status of the lithium carbonate plant at NAL, which we said is half filled. But what's the status of it right now?
Oh, the status is, again, as clear as I can put it, is we've commissioned a pre-feasibility study with Hatch. We know that operation, been working on for 5 years. So we should have a lot more clarity come March to have internally a fact-based discussion and evaluation on what the benefits to the joint venture would be of that option. And then that will eventually become, probably
Great, okay. And now questions on downstream. Are we doing hydroxide or carbonate for both? And what's our target? You mentioned, I think, 4,000 tonnes. Can you just clarify that target in your plan?
So overall, if that's the question, Anthony,
Yep.
is we expect that NAL will have the capacity to produce 23,000 tonnes of carbonate if we went down that path. And Moblan, the vision for Moblan is having up to 100,000 tonnes of hydroxide production capacity.
Great, okay. Thank you. There's more questions coming previously about the BAT, the OTA BAT. What's the status on the BAT process at OTA? Are we committed to doing the BAT? How's it all progressing?
So the BAT at OTA is in a interesting position. Openly, we have been working on going through a extensive public review exercise of this BAT in Quebec. And we've been on the basis, we've been working on the basis that we would be going through a BAT because OTA had it designed to have a concentrator as well as the mine. And at that production level, that scale of environmental potential impact, it would require this significant public review across Quebec. However, once we started, getting serious on acquiring NAL, one of the benefits, the beauties of NAL was that we would no longer build that concentrator at OTA. We would utilise the concentrator at NAL. We would therefore eliminate that environmental impact risk of having a concentrator at OTA, and OTA would become, frankly, a small quarry, and we would just move relatively small tonnage across from OTA on a daily, weekly, monthly basis to be processed at NAL and blended with NAL. Great. What that did not only solved a lot of NAL problems, but also, interestingly, potentially took us below the threshold of any significant scale that requires a BAT. It's no longer material environmental impact, it's just a small hole in the ground. Many quarries in that area. And so we've been in discussion, and we are still in discussion with the government, who it's their decision now to whether we should go through a BAT or not. And we're waiting for that to be confirmed. It's the government's decision. But we're open, because whichever way we go, OTA is now a relatively small footprint environmentally. And we're happy because we've already done 2,500 pages of work over 3 years to prepare for a BAP and all the issues, environmental impact assessments for that, particularly just the mining operation. We think we can get through that pretty quickly, very openly and very transparently, and we think that's important. And that, in fact, is our preference. We think it's time for us to demonstrate this leadership in terms of community openness, because there's nothing to hide there at all. And we're very confident that our measures ensure that there isn't any environmental impact of any significance from that small-scale OTA plan. But if the government decided that we didn't need to, then okay, we'd go down that path. So we're just literally waiting for the fork in the road as to which way we go, left or right. If we go on the path of a BAT or a curtailed BAT, that's fine. We're ready to do that. We've been preparing for it for 3 years. So in some ways, that would be cathartic, I think, for us to demonstrate to everyone what real hard work and logic to be put into that. In the background, we've also had our management team on site at NAL prepare a contingency plan such that if, for example, we went through the BAT, it took 6 months, then we wouldn't have that all out of BAT, because until it comes out of that process, you can get a mining plan. So we've had the contingency plan of how can we run NAL, right, standalone on its own for an extended period. which my team is very comfortable doing now. Part of the reason the Jordan plan and acquisition was all to give us this flexibility. So I think we've got all our bases covered, and we'll just do the right thing. That's what my position and the board's position is. But the government will decide.
Great. More questions about Mobland. You mentioned Mobland, the drilling that's happening, the new drilling program for the winter. Can you just give us a bit of update on Mobland?
Yeah, okay. Well, again, I think it's just we commissioned a 35,000 metre drill program earlier in the year. We've pretty much completed the 34,000 metres. We've got another month to complete. We've done a whole range of drilling, not just what I call, geological or production drilling, right? But also geotechnical and metallurgical. All of that is to give upfront information to the DFS, PFS engineers so they can actually be working, ahead of time on all of that information to design the mine, high walls, as well as the prep plants, and estimate what the yield, etc., will be for that plant and flow sheet design. So that's given us a lot of information, and again, that will all come to fruition early in the new year with a revised 43101 and a DFS in May, running through to a DFS in September.
Great. And question here about our share price. Of course, everyone wants the share price to be up. Okay, we wouldn't. So, how are we looking for next year? What are the milestones for next year for 23?
Where's that crystal ball? I think we're having a bit of a chat with the audience before here, in that I'm not going to speculate on share price. What I will say, though, is the basis on which we're built and going to continue building Sayona is really around three factors. The first is the lithium industry, and like you said, plugged into electric future. I think if anyone thinks EV revolution isn't stoppable or not, going to just keep going, must be living on another planet from me. So that curve's up. There'll be a lot of volatility on it, but I don't see that curve doing anything. And for the 3 years I've been here, I've seen nothing in terms of demand, but continually to increase every year upon year. Supply's always been the issue for the balance, but demand, I think lithium is going to continue absolutely on an upward trajectory, and we're based on that. We're all in lithium, so that's what we hitch our wagon. Second is the North American market. I think the North American market continues to become more and more aware, more and more acutely focused on securing its supply of the critical metals that are required for that EV revolution in North America, particularly the USA. And so security of supply will continue to increase. And I think we're seeing that from government grants to even Department of Defence, we'll get calls from. And Canada is part of considered domestic trading production or domestic production and treated the same as any US company for critical metals. And these are areas that, Sayona intends to become involved and avail ourselves with. So I think that's the second thing. I don't see that decreasing at all. I think the issues around the world are just going to make the USA more focused on that, and the Canadian government, and there's going to be more support for people who can get more tonnes more quickly. They're the two things we're just driving out with little steps quickly. And the third thing that tells me the second platform is on a vertical or is on an upward trajectory is Quebec. We're going all in Quebec. I don't see any other jurisdiction in North America that ticks the boxes when I started of where would you want to supply the North American market from. And if it isn't the resource base that they've got in spodumene, which we now, and shortly, we already own 120 million tonnes of probably a 300 million tonne known resource base. So we're up at 30+% market share, if you like, of that resource base, and I intend to have more. That you have that, and no one else has got that sort of quantity. And you have the technical, the infrastructure there. I mean, it's a mining, Quebec is a mining, natural resources timber environment. It's the same as Australia, Queensland. So that is, albeit, very sensitive to manage it correctly. They are pro, development, and that's what everyone does. So that's another big advantage as opposed to other jurisdictions, particularly the US, California. And thirdly is the fact that Quebec, is hydro, and that we can tap into, and our concentrator at NAL is 95% powered by hydroelectricity. So the carbonate plant, if it goes to carbonate, we can plug straight into at least 60 to 70% hydroelectricity. Mobland will be hydroelectricity, and it is the cleanest, greenest, renewable and cheapest energy source in North America. And those big refineries, washing machines, they chew a lot of power. And what I am sure of, and what every customer, including the OEMs, ask me about is, what's the carbon footprint of your product, Brett? How clean, how green is it? And when we explain how we don't have to anymore, they go, oh, you're from Quebec. Yeah, okay, that's it. And that, I think, is where Sayona is positioned. Our building blocks, our foundation stones, that all three of those are just getting more and more important and on an upward trajectory. So I'll leave you to work out as punters where the share price goes to, because I'm a lousy punter, because I just work on building blocks, and I don't see better building blocks anywhere in the world at the moment. That's why we're all in at the moment in Quebec, because I think for us it's the best bet. So, did I do well? Answered it without answering?
That's great. Yeah, we're pretty much, how are we going for time?
I just have one quick question. It's been a wonderful journey for us as shareholders. Because you're building these assets in North America and getting your production, do you eventually see for shareholders that you might want to do a listing in the North American market? Have you got any thoughts on that?
Yeah, James, look, I think it's destiny. If we achieve our goal to be the leading lithium, spodumene producer and supplier in the North American market, then at that scale, and it's a lot bigger than where we are today, that scale will mean that we'll need to access more funds and a listing in North America, it is, I think, logical. Right? We're not there yet. The board hasn't, decided that. The ASX has been very, very supportive of us, and I think we get everything we need to be able to keep this growth rate up. But if we keep getting, up on that steps to a 900-pound gorilla, then we're probably going to need to be more focused, because we'll be such a large company. We already are a very large company in terms of market cap, just in Quebec, but one of the larger, top 50 companies in all of Quebec. And so, if we were to move that up in multiples, then I think it's likely that will happen. I think also it'll be an interesting year, 2023, in terms of, I think you'll see, and we'll see, and we're working with some very large international banks to help advise us and keep us on our toes in the 2023 will be an interesting year in terms of amalgamation, consolidation in the lithium space globally. I think, there's a lot of people who are now waking up to, well, it isn't just a maybe, but it is going to happen. And some very, very large companies are going to start, I think, focusing in probably nowhere more than in North America. So how all that pops up, again, I didn't bring my crystal ball, but we're keeping our eyes on it because I think there is a lot of moving parts, not just within Sayona, but there's a lot of moving parts in the lithium industry in 2023. It can be a fun year.
Yep, still have time.
How's the clock? 11:30?
A couple of quick ones.
One, but that's going to cost you a beer.
Just the dual RTA now DFS, which was sort of supposed to be due around this time early next year. How's that tracking?
Yeah. We are working currently on.
That's still going.
Yeah, so it's still in progress. I expect to have that out. It'll be in the new year. You can see with the back on North here, there's a few issues that mean you can't complete everything.
So that's the thing that's sort of held it up. The back.
Yeah, there's a couple others, but yeah, other things are getting ground through, which we knew when we put out the PFS, that we would have to come back and redo them, or modelling at NAL. It can be refined and improved. I see them as all improvements, including probably a price forecast that we didn't even think about 3 months ago, and here we are today going, wow, okay. So the world's moving fast in that regard, but yes, we are working and intend in Q1 to have a new DFS.
There's some big things in Q1 next year. Then. DFS, pipeline.
Yeah. Go and have a look at
Production.
that. There's always big things every quarter, but specifics. You're right. It's the team, and there is a team just focused on getting the startup. There's a team focused and just focused on mine planning issues around Jordan, DFS, etc. That's why we've got 100 people up on site now. There's a lot and more coming on. You can see that. Part of what we talked about, the growing pains, but we are growing as fast as we can in the centre of where everything's at, which is Quebec. There's a significant, and that is our priority, to make sure we keep up with opportunities.
And just on funding, the government seems to have started throwing a bit of money around.
That's too big now.
I've got to get these out. Sorry, I've been holding on to them for so long. Is there anything in place with the Quebec government, DAD, etc.? Have we approached anyone for funding for the project? The carbonate plant for refining for anyone? Or are they knocking on your door?
You answer the question. We've approached lots.
Yeah.
Because of course, in the last few years, we didn't have the money ourselves to be able to raise the sort of dollars. Today it's a bit different, but so everyone in Quebec knows who we are, what we're trying to build, and what we're looking for and support. In fact, everywhere from USA to Korea to London knows that now. And that's why we're working with some of these large banks, global banks, to utilise their network around that. And fortunately, again, everyone seems to be after offtake. In the second breath says, "And do you need any funding?" So all of those are getting thrown through, but they're all part of these steps to not only deliver the best assets, which I think we've proven in 2022. We're an organisation that can do that, but we'll also now get into some serious dollars. 100,000 tonnes of hydroxide is circa $3 billion worth of investment in production facilities. Okay.
Is that Northern Harbour Land Monster?
Correct. So that needs a whole new weight division in terms of capability and capacity, and we're working on that to make sure we've got the right partners. As I said, because partners are important. The Piedmont partnership has gone well, and up north, we'll develop that with partners. I expect as well, financing partners, chemical partners, etc.
Right. I think we might. Oh, last one.
Sorry.
Just speak up.
You've spoken exclusively about Canada, and that's great. Just a little update on the West Australian tournaments that's going on over there.
For sure. So, yeah, look, it's, it's clear, right, that Quebec is our priority focus at the moment, because there is just so much, opportunity and scale up there. That's just the first to put that in context. But West Australia, we've been busy. And we've started this year on, and I know when I was here talking at the AGM last year, we committed to an extensive exploration program. So out of the deposits that we've got, the leases we have in the west, we did significant amount of geophysical exploration as a first pass. From that, our geology team, who's based in Western Australia, Simon developed some follow-up targets, of which we then did some RC drilling, and we're going through and have gone through a number of evaluations on what they're at to bring us to the next level of effectively targeting, which will probably be deeper holes, and that will take us through into the new year. So, it hasn't, nothing's come out of it like, spectacular, and it's why we haven't been promoting it. It is little steps, and they've been a bit slower than we really were hoping for, post off the back of COVID, post off everything in terms of supply, constraints in the west is just like that. But it continues to progress, and we're certainly interested in it, and we'll release the results once we get down to that definitive position, which I think will be in the new year.
Okay, so if there are any other questions that participants have that they think haven't been addressed, feel free to email us at info@sayonamining.com.au. I know we've had some issues with that email address in the past, but as part of the upgrade with the website, we've also made some IT amendments to that email address. So going forward, that should sort out some of the issues. So feel free to reach out. Well, thank you everybody for attending. In the absence of a reason to get together, we'll see you next year. Thank you.